Hey, what's up, everybody? It is Friday, October 6th, and we are going to go over the markets for today, the futures markets. So starting off, let's go back over here. This S&P 500, looking at it on the 5-minute chart. We'll go over to the 15-minute chart. You can see it started off today right at 7:30 a.m. Central Standard Time. Had a huge drop off down here, down to, look at that, it hit perfectly right into the extension lows of the day, and then found support and has blasted off ever since, and is actually getting close to being a overshoot of the day, of the highs over there, a blowout day. So if it hits up there, then yeah, it's considered a blowout day, and so crazy day today. But what led it all was early this morning. You see the average hourly earnings was a tenth of a percentage point lower. The non-farm employment change, though, was very positive, gained 227,000, but then the unemployment rate raised a tenth of a percent. So it's mixed signals, and so when all that news started coming out, the market sold off, found some support down there. Imagine that, around the extension low, and then it's just blasted off ever since. So obviously the bulls overtook the bears for it, and here we are today. So yeah, the huge payroll surge, as it says right here, that's was the catalyst for it. Yeah, look, futures turned negative after jobs data, but then once the payroll, that really good report came in, the market blasted up for it. So yeah, going into Monday, which is, I believe, Columbus Day, we will have something like that for the extension level. So really wide range going into next week. But for the rest of today, we'll go back and put it on here. And there is a new trade setup I want to show you. I've been trying so hard to make these pitchforks works. I love the way they provide a detailed structure for it, and I found a couple different ways that I've talked about in other videos that I had been using, and they work for the most part, but sometimes just get caught in the wrong trend. It just goes out the other side. So I'm always looking for something simple that uses as few indicators as possible. So the one I'm looking at now, I've been trying, is simply, and I love Fibonacci extension levels and retracement. So it's pretty much always going to include that. That's going to be kind of like the basis of it as far as entries and exits for the most part, and then need something else to kind of help with it. So as you can see from my charts, all I have right here is, I'll show you what these are. All that is previous day highs and low, the red dotted line's low, green dotted line's high, and then the semaphore right here with the red ones and the orange ones right there. There's green ones that you can get, but I don't use those because those are the lowest ones, and just puts too many dots all over the charts. So look at this, the 15-minute chart. All you do for this new setup I have is you look for like an A, B, C, D type of move for it. So you see like A, B, C, D, like that right there. And I know in TradingView they have it. Yeah, so you can use like right here. So let's see here, A, B, C, D. That's basically what you're looking for right there. All you're looking for is there's the high, low, retracement, and then going down there and hitting, at least using the high and low, going down and hitting the 1.146 extension level. That's how I look for it to be an ABCD type of move right there. But I just wanted to show you what it looked like from there. So that's what you look for. That is the setup. So once you have that set up, then all you do, if it's going in a downtrend, you just do the line right there to that one and that one, and that's why I like using the semaphores, because it provides more structure to the chart, and just look where to look for the pivot points for it, the overall pivot points. And then all you do is you wait for price to close above it, which it did about this one or this one for sure right there. So then all you do is, that's your entry bar. You go down here, take the low, drag it up to where the high is. See, that's the high right there, since there's the high. There it is. There's the high from that move, and there would be your entry right there, or actually on that one right there. So then what you do is, your target you're looking for is the 1.146 level. Now a lot of times it does go up to the 1.44, but I have seen enough the times where it only hits the 1.146 and then moves out of it without going up to the 1.414. So to be safe, just stick to the 1.146. So like for this one, for instance, if that closed above it right there, you get in right there, you know, you're looking at close to about 13.5 points there in the S&P 500 for that one. Now, it obviously doesn't go up there and go right away and up there and hit it. As you can see, this one waffled around, hit it back up there, and then this morning, you can see it went all the way down here. It looked like it was just going to shoot out from the bottom side, but found the support down there, and then it's just rocketed up ever since and would have completed it right there. So that is the genesis of that trade and how it works right there. But those are, I look always for that ABCD. So we could do a couple more right here. So here'd be another one right here. And I'll just go over here and put that on there. Just show you A, B, C, D. And then just put that on there, because you can see there's the A, there's the B, there's the C, didn't break that high up there, and then here's the D down over here. And so that is, it hit the 1.146, so that is the setup right there. And so once we have the setup confirmed, then we just take the line, draw from the high to the lower high, and then we wait for the breakout. And we can see the breakout happened right there. So then what we would do is we go down to the low from that move up to the candle that is the breakout candle, which is that one right there. So there's low Fibonacci, the high Fibonacci, the exit's the 1.146. You can see that one came off getting pretty close, didn't quite hit it, went back all the way to the other side, which was the 1.146 and 1.414 the opposite way. And a lot of times when price does go down all the way down there, that is another good entry level to get in, but I will show you it doesn't happen every single time in, I think it's the Dow Jones here in a second. And then price came up and hit it today. As you see, I got out right there. I'd gotten in the other day, I think, right over here. So unfortunately, I didn't get all the way down in here. That would have been really nice, but just for a little profit right up in there. And so that was that for that trade setup. That's how it works. And yeah, you can use any time frame you want. I prefer the 15-minute. I'll also use the 5-minute chart from time to time. Now, like you see this one right here, this one would not be an A, B, C, D trade setup, because there you have the A, there you have the B, but to have a valid C, it can't go below the A level right here, so it couldn't break that low right there. So since it broke that low, that invalidates it, and that's not an A, B, C, D move right there. So yeah, so far, and I like this trade. You can use it on any time frame, and also you can do just the red ones, because the red semaphores, because to have a red semaphore, you have to have an orange one inside of it, because the red ones are the tier 3, oranges are the tier 2, greens are the tier 1s. Like I said, I don't use those. So you can either use, you can go straight up like orange, 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 red, like that one's a legitimate one right there. Like that would have been an ABCD move. You have that breaks out, and that easily hits it down there. There's the high, there's the low, go down there and hits it right there. So you can use, you know, all the oranges in a row or all reds in a row. So there would be one like right there. So there's an A, here's a, oh, is that one actually higher? No, it's slightly lower. There's the C right there, see A, B, C, D. Price slowly broke above it, came down below, and then finally broke above, up right over there. So yeah, that's that. That is the, what's this doing? There we go. That's the S&P 500 for right there. And yeah, there's actually a longer one that I want to show right here on the 15-minute chart, because there you have the A, B, C, D. Price come out. See, I got in right over here the other day. And then this is the trade I was in. There's the high for that move. There's the breakout right there. So the target I'm looking for was right up there. And see, price came down all the way down here before they finally broke out. And I actually got out right at the before the extension high of the day right there. But you can see price has just blown through it, so no big deal. Russell 2000, same sort of thing. You see we started off hitting off the extension highs of the day, all the way down the extension lows, and look at that, just like the S&P 500, found tons of support and blasted off all the way back through it. So this is probably where the market's going to end up, somewhere right up here for the rest of the day, since it's about 2 hours left in trading time, going into a holiday weekend for a lot of people out there. And yeah, nothing really else to say for that. Now there was a really nice setup right here. It would have been hard to get into. You can see there's the A, B, C, D right there. So we just take the high, go all the way to the candle that breaks it out, which is this one right here. Look at that nice big candle right there. And then if if you're lucky, you could have gotten in right when that one closed open, but you see that would have been hard to get into. But if you did, right there, all the way to down there, nice little 8.5, 9-ish point gain in the Russell 2000 for that one. So that was the trade of the day for the Russell 2000. But you can see it's had a big drop down this week. And actually, look at this right here. Here's an A, B, C, and then the D's all the way some down here. No big deal. So what we can do, looking for a long entry going into next week. Do that right there, that right there. So if this thing breaks out from over here, we will take the low down there, go all the way up to the high, right over there, wherever it breaks out, and target be somewhere right up here for that one. Going down to the Dow Jones, yeah. Now, so this is one I was mentioning earlier that I want to show you here real quick, because it doesn't always, you can't always use this second entry down here during the 1.146 the other way, because here we have an ABCD, A, B, C, D move. There you just do the high to lower high, wait for the breakout. There was the breakout right there. And then there's the bar, the breakout. I highlight this so it's easier to see, and highlight that area for the target. It still hasn't hit there yet, and we see we had pretty much a sell-off, then all the way down here. This has definitely been a consolidation zone before it broke out today, and we're getting pretty close to coming up here and getting the high, touching right up here. So maybe if it gets another push up today, we'll go and hit it, or perhaps going into Monday. But definitely once I saw that this thing was rocketing up, this is real good risk reward today. Got in right here and then got out on that bar. Just get out on Friday afternoon right there. But that's the one downside for that seed is there can be some drawdown to it right over there for it. So I think this one actually took a loss on. I can't remember. Yeah, because I didn't trust this one. So I got in right there and got out all the way right there. Got in right there, out right there for a little gain. That was the 5-minute chart for it. But now that I trust this more, I'm starting to get back in there and get back into profit for this trade setup for it. So that is the one downside. Like that's. Let's see what this. Let's see what this is down over here. How low did it go? I don't need that. Let's see, 2.618. Let's see. Yeah, okay, so that's pretty much it. So maybe this will be like the second kind of area to look at to getting into right there, is if it does go up and just completely blows it out down the other side, maybe the second entry is down here at the 2.618 level for it. Thing is, you just don't want to get too many contracts in when the market's going the opposite way, but that is definitely the lowest I have seen it go for this one, and see it blew right past the 1.1461 the other way. So it's still a little bit of work to do for this one going up here to the upside. How much more? 110 points here in the Dow, so not that big of a deal for it. Here is oil, and yeah, we have a little bit going on over here, because as you can see, oil this week has just gotten obliterated, starting in from last week. The highs up here 95, all the way to the low down here down to 81. So oil has just gotten lambasted over here, and kind of like the other markets, once it hit the extension lows of the day, it found some support down here. There was a little trade setup I did take to it to today, so I think it's off the 5-minute chart is what I did. Yeah, it was. So using red semaphore, red semaphore, red semaphore, there's your A, B, C, D down here. And then when price broke out right there, that was your setup. That's your signal bar right there to get into it. And there's target way up here. So I was able to get in on this bar. Then I just went ahead and took a profit right there to get out of that one for a nice little scalp for it. But obviously I wish I'd stayed in, because look at that. It went up right up there, hit the target right up there to complete that trade setup. So that one is said and done. And that is oil. And then going into next week, it's just when you have a decline like this, it creates a lot of long setups here for it. So if we get a push higher going into next week, we'll have another good setup just from that one right there. And then there's even another one, which I think those two would be the exact same, because there's an A, B, C, D right there to right there. Yes, so it's pretty much the same. And then we had another one. See this A, B, C, and then D's down somewhere over here. So if you had done that, you're looking at that right there. But what you have to do before you can get in is you wait for the 1.146. So here, hit right there. So when you look for the breakup right there, there it is right there. And then the target you're looking for is right there. And so that's a nice little scalping one I did take for there as well. As you can see, got in right there, pretty much out on the same bar. It went up right there and hit the target for that one. So we'll see going in next week for oil. If we get push higher, we'll get a nice little long setup for this one right up here. You know what, actually, look at this thing. Did I take this one A, B, C, D? Is that an A, B, C, D trade? Let's see here. Yeah, for sure. All right, let's see what this looks like. This is probably already done, though. Yeah, probably done. So there's the low. There's the high. It broke out. Yeah, that one's done. I think we talked about that a little bit ago. Going over to Nasdaq. Here's one on Nasdaq. Missed, unfortunately. That would have been a really nice trade right here. Starting back from all the way this setup. Here's the A. Actually, the B would have been down here. You see that semaphore. It gets kind of messed up sometimes. So we're in A, B, C, D, all the way down here. So using those two and those two, you see price broke out right there. So if you use the low down here, let's see where the high, this candle is where it closed above it. There's the breakout. And it hit it right up there for the target. So that one would have been, oh, this is a 15-minute chart. You may be able to get into it, but you can see once it closed, went slightly down, then just powered right back up through it. So that, I wish I'd taken that trade. That would have been a really nice one here in Nasdaq to get into for that, but that one is done there. I still have this old, see the old Fibonacci extension level from way down here. This is a inside pitchfork trade that just went completely out the other side, but 6.32 extension level, which is just a square root of, I think, 40. Is that what it is? Yeah. So just seeing if the square root of 40, and it has provided the support level for it, you know, maybe that's another Fibonacci number to look at. So we'll see. Because the inside pitchfork trade, if that is going to be the support for it, it goes up there and hits that, then maybe I'll bring that back into it and only use it when I'm looking for big sell-offs there for the inside pitchfork. Because did I change it up? I don't think I changed it up. Let's see here. Template. I don't remember, to be honest. Inside pitchfork, what's that? I don't even remember what the one pitchfork, that's not it. Those yellow lines. Target only, that's not it. I don't remember what it was. Yeah, I think that was it actually. Anyways, we'll go back and look at some other time, but that was the Nasdaq trade for today. And there was another, look at this A, B, C, D trade. Let's just make sure it fits with the Fibonacci extension level. It does right down there. So then there was another trade right here, another to the long side. Price broke out right there. You can get into it. There you go. There's target right up there for that one. So that's basically how these setups work. The market's in a downtrend. Is creating long setups when it goes up. If it's an uptrend, is creating short setups when the market eventually comes down. Go look at Bitcoin real quick, because one thing I'm looking at Bitcoin is, was it the daily chart I was looking at? Yeah, daily chart right here. So you have A, B, C, D setup. So there we go, A and C's. Price broke out down here. So there's the high down to the low where the breakout is. The target is the 1.146 level right there. So this setup is, you know, accurate. We are looking for a little bit more of a sell-off coming to Bitcoin, all the way down to around 24,660 here in Bitcoin. So I do like having long holdings in Bitcoin and Litecoin. So if the market drops back down here, I may look at adding a little bit to the position down there. I haven't checked Litecoin, but we'll see if there's anything going on down here. Nothing on the daily chart unless there's another. There could be a potential long here. Let's see this. So you need price to go all the way down here at $3.86 for it, for that one to be an ABCD trade. There was one right here. Here you can see the red ones, A, B, C, D. Let's see this right here. Let's see what that would look like. There's the low right here. See which candle broke out. That one broke out right there. And came up and hit it. No problem right there for that one. Then we go long term oil. Let's see what oil's doing. For the long term, is there an ABCD here? No, but there was one when it came out of the lows down here. ABCD, A, B, C. If market goes up to, I got it down here. There's it. If the market goes up to $155.44, then what we'd be looking for would be using the A point to the C point. Get on there. A point to the C point, and then when it breaks, we'll be looking for a short down there for it. But that's the market has to go up and hit $155 first. And would that be the first time ever? Yeah, that'd be the first time ever. It goes up there and does that. So that's if that happens for it. But that is that. We did Bitcoin, Litecoin, everything. All right, well, that's it for today. Have a great weekend. Talk to you later. Bye.